Hey everyone, Jamie, Port St. Lucie Mortgage Brokers. Hope you're having a fantastic day. Today, May 11th, I wanted to talk about some updates that are changing, how the mortgage industry, kind of touch on some news that's been kind of floating around out there, some changes to some programs, and then also some insight on what I'm seeing for my buyers and how that may help you as a listing agent and also as a buyer's agent. So let me get started with kind of the headline is, as inflation has been coming down, mortgage rates are coming down, which is great news for all buyers, right? This is going to help especially those first-time home buyers, those buyers that have been sitting on the fence, and then also those buyers that have been stuck in their homes because they have a very low interest rate, that 3%, and nobody wants to get rid of that, and nobody wants to go from 3 to 7 or 8%. But it's actually helping them now maybe reconsider that, because now as the rates come down, maybe it makes sense. You know, you're still going to probably get into a higher interest rate, but maybe you put more money down. Maybe there's something there where you are able to save money, right? Or keep the payments the same. So this is just a great win as these mortgage rates come down. So hopefully you're seeing that impact on your buyers and actually on your listings as well. You know, more buyers are qualifying. Your listings are going to come off the market quicker. So that's really good news. Some information I want to talk about on news that's been on the news for a little while. It's these loan level price adjustments. So I'll touch on two of these. The first one is, we've all kind of heard about, you know, better credit score clients getting penalized, while the lower credit score buyers are kind of taking advantage, or, you know, that on the news. So let me clarify a couple of things. Some of that is actually accurate. You know, the pricing adjustments did go up for some buyers that have better credit scores, and it did go down for some buyers that have a lower credit score. But just keep in mind that the better credit score clients are still getting better programs and better rates, while the lower credit score clients are still getting those higher rates and maybe not even qualify for some of those programs. So always try to get your better credit score. I would not put too much weight on this when making a decision. Also, these changes were actually implemented months ago. Although it actually took effect May 1st, that was the day that Fannie Mae and Freddie Mac actually started collecting the fees from the lenders. But the lenders really implemented that months ago because they have to, you know, lock these loans a month, 2 months earlier. So you should not have seen a big difference come May 1st than you did March or April 29th or 31st or whatever last day was. So good news there. Or the good news is also that as the mortgage rates have come down recently, it's kind of nullifying these changes anyway. Everybody's getting a lower interest rate for the most part. So again, a big win for buyers. Another loan level price adjustment that was supposed to take into effect May 1st, which was any client or any buyer that had a debt to income ratio of over 40% was also going to get kind of penalized and get either higher cost or a higher rate because of that. They kind of went back and forth on this, and they basically pushed it back to August. Well, great news here. Just over the last day or so, they've actually canceled that altogether. So they are no longer looking at penalizing buyers that debt to income ratios are over 40%, which is again a win for buyers agents, for listing agents, because now more people are going to qualify to purchase a home. So just great, you know, win-win for everyone involved. A change that's coming down the pike starting July 1st, you may have heard this, is Hometown Heroes is no longer going to be tied to the occupation of the buyer, but their income level. So if they qualify, if they're on the lower end of the average medium income in that county, they will qualify for the Hometown Heroes. The second piece or the second change to that is also the maximum $25,000 is going to $35,000. So again, another win, another opportunity to get those buyers to buy and get your listings off the market. Lastly, I want to talk about some changes or some things I'm seeing in the market where my buyers are being able to buy and take advantage of this here, where what I'm going to talk about here. But it's basically for those listing agents that are that they have a house and they're basically kind of sitting on the market and they're looking at price reductions. One thing I would suggest is maybe looking at seller concessions prior to looking at lowering the price on the home, because that seller concession is actually opening the pool of buyers that may qualify. By you giving $10,000, $15,000, $20,000 to a buyer, you're basically giving more people an opportunity to purchase that home than just lowering the price. When you lower the price, a buyer may save just a few $1,000s on their down payment, especially if they're going FHA with 3.5%. If they're able to get $10,000, $15,000 to cover their closing cost, that's really going to impact their ability to qualify. And it's if you had 2 clients that qualified, that's going to open it up to a lot more clients that are going to qualify to buy your house. So it's just a conversation to have. It's just an idea. I know it's very easy when the house sits there for a while, and then we got to look at lowering the price. But just something to take into consideration. Seller concessions actually impacts the ability for buyers to buy that home more than if you just lower the price. If you have any questions, if you're not sure how that works, please give me a call, and I'll be more than happy to help you.